Alrighty, welcome back to Weenie Trades. Quick holiday recap. I'm going to be talking about how I doubled my money in 5 minutes and why I should really use wider stops when the volatility of a certain stock is super high. So our first trade of the day was on Apple, and Apple was pushing up really nicely, and I could feel the FOMO buying just a little bit. But look, we pushed up. That creates the flagpole. Then we go sideways for a bit, and over 131.87, I went ahead and went long Apple with the stop just beneath 131.66. Just buying the same day call contract, $50 cost, and just risking about $5. So I'm going to stop out and lose $5 really fast, or it's going to go and work in my favor. But Apple put in this nice, good ascending triangle and then broke out. As the volume was starting to increase, I noticed that, hey, this could be a really good move. So I just trailed up my stop, and then look, boom, Apple pushed up really nicely, trailed up my stop underneath this candle, got a nice, good push up, trailed up my stop underneath this candle. And then look, we get this nice, good push up. And then as we started to come back down, I tagged out of that contract. $50 turned into $100. So doubled my money in about 5 minutes. 1, 2, 3, 4, 5. Boom, straight up. Nice, good, clean move. $50 revenue trade on Apple to start off the day. But our next trade of the day was a little bit more dicey. So BABA had a big negative news catalyst. I'm not too familiar with it, but I know that we're extended into support. As long as Alibaba is still a real company, it should have some sort of bounce. So I'm scouting for dip buy levels, but we just had a nice strong downtrend all day on BABA. Would have been a nice short to probably catch, but once we started to consolidate a bit and then break down, I'm noticing the volume starting to increase. That means there's a little bit more eyes getting onto it, which means we could be looking for a reversal. And then right here, look, we based out right at this 212 level, and then boom, we broke down, spiked the lows, 211.23, and then we reclaimed it right away. So because we reclaimed it, I went ahead and went long on BABA, just over 214, with the stop just underneath 213. I kind of wanted BABA to really pop because there's probably a lot of short sellers in it, and I wanted them to get trapped. And so I wasn't willing to tolerate barely any red. So it was either going to be a quick stop out or a nice, good revenue trade. And BABA, in at 214, stop hit at 213, boom, minus $36. But that's okay. That's within the realm of the stop loss. What I really wish I would have done is used a stop of, underneath 212, a $2 stop loss. Because if I'm targeting, something like the 219 area or 220 area, I'm going to need a little bit wider of a stop. But oh well, that was the amount I was willing to risk. But had that trade worked out and BABA did hit the 220 level and pushing higher right now, that would have been about a $300 to $400 revenue trade instead of a $36 loss. So shoulda, coulda, woulda. That's everything with the market. Small little red day, mostly because of option decay, about minus $100 to $200. Not a big deal. Yesterday was over 500. The day before that was about 300. The day before that was, minus 550. But, that's okay. It was still a really fun holiday week. Let's get ready for next week and let's finish out the year nice and strong. See ya.